with another episode of Bullish Chips, where we talk about chips and only chips, more specifically the Direxion Triple Leverage Semiconductor Bullish ETF, which goes by the ticker symbol SOXL. Make sure you're following us on X at the handle Bullish Chips. That way you can see our real-time entries and exits on not only our day and swing scalp trades, but our mid and long-term swing trades as well. Make sure that you subscribe to the YouTube channel and hit the notification bell. That way you are notified every time we release a new video. We do release a video every weeknight and then one video on the weekend. So you want to make sure that you're up to date with the latest analysis. If you like today's video, make sure you hit the like button. Always helps out the show. But we also want to let you know that we are not financial advisors. We do not provide financial advice. What we do provide is our view of the price action for SOXL, not only in the current day, but the previous price action, as well as what we believe price action will do in the future. So without further delay, let's go ahead and get into the chart, and we can see that once again we've got the weekly chart up just to see how the week has started out. And we started out in the middle of last week, which was an engulfing candle, a bearish engulfing candle because it was red. So we did get action at the middle of the candle to open the week, but it was a pretty muted day. Even if we stretch this out, even if we continue to stretch it out, you can see it's a pretty muted day. We did have a gap up. We did hold the gap up. Let's go ahead and look here. Oops, no, it's not the month. We want to look at the day. All right, so we did get the gap up here, and we were able to hang up there, but there wasn't a whole lot of price action. We got more price action probably than a lot of other things that were out there in the market today. From everything that I was looking at, there's a lot of muted action today, so not a whole lot of movement. It did trigger the 1, 2 down, 2 up. It ran that strat. And it triggered the 2 down, combo 2 down, 2 up. So the magnitude for that would be the high of this candle, which was 27.28, and we believe we just made it to 26.99, so almost 27 today. So haven't completed that strat, but wasn't a whole lot of action today. Maybe a little bit more than the rest of the market, but not a big day for the intraday trade. If you had any swings over the weekend, the gap up obviously helped out, especially if you had swings from earlier on in the week or previous weeks. Kind of get back to hopefully above your entry points, and back to being in the green, or at least staying in the green. The range that we've been in for about 4 weeks now is from this 24.38ish level to 28.13, which happened to be the quarter and month flip and the year flip. So hopefully you were buying the calls down here, and you've remained green even throughout this downward action that we had at the end of last week. But as we mentioned, the year flip, which would flip the year green, which would put us in full time frame continuity to the upside. If you take a look at the upper left hand part of the screen, you can see we had the day, the week, the month, and the quarter, which are green, but the year is still red. So we're looking to flip that green, but we have been saying for a number of weeks now that this, prior to reaching the year flip, we said that it would probably be some resistance in the future when we were talking about it in previous weeks. And then when we did get to it and got rejected, price action rejected there, we were expecting that, and we were ready to play puts to the downside, even if they were quick scalps, because we weren't sure how far it was going to pull back due to the push up that we had over the previous 7 weeks. Remember, we had 7 weeks of green action until last week. Last week would have been the 8th green week in a row, but it did finish red, so that did stop the streak. So we could be back to green action once again, but because the week did complete as a bearish engulfer, and again we do play the strat If you're not familiar with the strat, take a look in the description of this video. There's a link to Rob Smith's YouTube page, Smith in the Black, and he created the strat. There's plenty of information about Rob Smith out on the internet, so make sure you do your research and determine whether it's a strategy that you would like to use. But it is something that I incorporate into my trading strategy. So with a bearish engulfer or a 3 candle, there are a number of reversals to the upside that you can have. One is a 3, 1, 2 up. One would just be a 3 and then a 2 up, 2 up. It's not as common, but the one that I like to play best is a 3, 2 down, 2 up. Gives you a lot more magnitude to work with, defined entries and exits. A 3, 1, 2 up can always turn into a 1, 2 up, 2 down. So a 3, 2 down, 2 up kind of gives me more confidence in being able to reach the magnitude and it continuing, because the bottom of the 3 would have been taken out. And one of the things that is part of the strat is, once one side of the 3 is taken out and you move to the other side of the 3, you usually breach that side of the 3 and continue up. So you would be looking for a 3, 2 down, 2 up, 2 up in continuation, where as opposed to where you could have a 1, 2 up, and there can always be the option for a 2 down, because that's a reversal as well. A 1, 2 up, 2 down. That's probably my second favorite reversal to play. So right now we're still standing firm, in our positions. We've got some that expire at the August monthly expiration date, which is August 15th. So no real need to move with any haste right now. Let's go ahead and bring it down to the 15, and we can see there wasn't a whole lot of action to be had, unless you wanted to remain in contracts past some type of violation, right? So by the rules we use, if we don't get a higher high, then we would stop out at the low, the previous higher low that there was, because it would be going down to make a lower low. Now, actually, I may have to eat my words. What's this? The high is 26.99. Yeah, 26.99. So we did not get a higher high there. We got an equal high, and the calls that we were in, we stopped out up here. We decided to take an early stop because this, the wick here was just too much of profit to give back, and sometimes you have to go by feel. With a double top, a lot of times, especially on the 15, that's usually a good signal that we're going to go back and make a lower low. Again, it's not always the signal, but because we knew we had put this 2 up, excuse me, a 2 up following the 2 down, making this a higher low, we knew that if it breaks below this, then we no longer have a chance for making a higher high after this candle had closed. So we were in it for this sideways action. Thought we had some more push up when it popped up at one point, but we had already been stopped out because this 3 had come down and violated the bottom of this 2. So our calls that we had bought, I'd have to go back and look at our X accounts. Yeah, I think we got them on the 1 minute. We had to have to make any type of money, because we did make a little bit of profit. Yeah, we got in on this higher low right here on the 1 minute. Did not get in on it here because this had been a lower high, so we waited for the higher low here. Did get another lower high, but since it was followed by a higher low, we went ahead and got in. This could be the start of a uptrend. It did go up, like I said. We moved through the sideways action until this around here, when this candle violated, I think it was up here maybe, and so we did make a little bit of money on calls. We grabbed some more. Again, I would have to look at our X account. We grabbed some more in the lows around here. If we bring up we have to bring up our scalp chart. Yeah, because I think it was because we came down. Once we hit this sideways action, we ended up pulling out and drawing a couple of extra fibs just to see where more recent action might play. So we did try and take a bounce off of here because it had been resistance before. Once we got this, we got in on the higher low on the 1 minute. We do get down in the 1 minute for our entries, but it lined up. I think the hour was still inside, if I'm not mistaken. Let's go to our swing. Yeah, the hour was inside still. We had 3 inside hours in a row, so we decided to give it another shot because this higher the low here was higher than this previous low, and we were getting action that was barely below this close. So it seemed a little bit more bullish on a short-term perspective, even though there was downward action. So we did get back into some calls. We actually, the entry I don't think was that low, if I'm actually mistaken. I think we waited till we were up higher because we ended up selling the second set of calls for like very minimal profit. We did keep one runner overnight just because we finished the hour as a green hammer. Yeah, green hammer on the, well, I guess it wasn't a hammer, it was more of a doji, but it did look to us like this could be a higher low on the hour, setting up also for the 1 2 down 2 up. So next, the first hour of tomorrow would hopefully be a 2 up to continue that strat. Now the magnitude wouldn't be that much, it would just be the high of this candle. But if we look at after hours, we can see we're at 2708, or no, 2718, I'm sorry, which is about 0.75%. So we're looking in good shape as far as those are concerned. If we were to open here tomorrow, if we open higher, that'd be even better. If we open, where we closed, we're still just barely green. Theta would probably kick in. It's only one contract though, so if we did, open up even and look like we were going to push down, internals were bearish or something like that, and we needed to sell, we could still get out for just a small loss. Now that would probably negate the gains, depending on how long it took us to get out and how far it pushed down. That could negate the gains of the second set of calls that we got yesterday or today, but that's not that big of an issue. We still made a little bit more profit earlier this morning, and frankly, with a day like today, intraday, you can't really expect too much unless you were just hitting the very lows and highs perfectly. So I'm very satisfied with the day today, the direction that things are moving back in. We do need to go ahead and map out our gaps. That way we know where those are at. And it's very easy. We're just going to do this. So we have a gap on the day chart, and it's from here to here. Just want to put a quick label there. Alright, save that. So now we know that we have a gap here on the day chart. We also want to flip over to our notes real quick and throw this in the gaps below, so we know in our notes, if we just have to take a quick glance, there is a gap from 2634 to 2562. So not too far away. It's 2688 that we closed at, so easily closable tomorrow. If we open down tomorrow, we could go close that gap, or even just bounce off the top of the gap. It doesn't really matter. The gap is very close and easy to close. So let's go ahead and just make sure that we have that on all of our charts to remain consistent. Oops. Let's just get that copied. And we'll just make this till 27, just to be on the safe side. If we never come back and test this level, I'd love that, but just to be consistent, this is how we're going to do it. All right. And then our day trade chart. Make sure we always have these noted. And let's go to our scalp chart. I know for people who are not familiar with my charting, that might look pretty messy on the scalp, but if you are familiar, you know how it all plays in, and we're not usually looking at it from a zoomed out perspective, so it doesn't look that messy. If you do want more information about how we set up our charts, what the different colors mean, you know, how we use broadening formations in the strat, look in the description for the link to our precision trading videos and the videos for you know, how to set up the basics for any chart. These carry over to, you know, any type of stock. You know, it doesn't need to just be semiconductors that you use like this. Again, this plays into the strat, you know, created by Rob Smith. Again, do your research, determine if that's something that you would want to use, but I highly recommend it. It's one of the easiest ways to understand price action. There's only three things a candle can do: is be a 1, a 2, or a 3. So make sure that if you don't understand what I'm talking about as far as the 1, 2s, and 3s and the strat combinations and reversals, make sure you go check that information out. Again, it's in the description for the video. So I hope I'm not losing anybody, but now that we have marked out our gaps on the day, let's go ahead and mark up our set our 4-hour markings. Again, if you're not familiar with these, check the links in the description to how we set up our charts. That way you have a good understanding of you know, what all these lines mean, the different colors, how we use them to do our day trading and scalping. And how we use them to create a consistent trading method that we can, you know, reproduce over and over every day to get the desired results that we want. Does price action always go in the direction that we want or that we expect? No, but more often than not, using these rules of the previous low a day, the 4-hour down trigger, and the 4-hour up trigger, previous high a day, overnight low, overnight high, and opening print. Those are your keys to, you know, your day trades, knowing whether you need to be in puts or calls. You know, you combine those levels, especially if you combine those with some internals, you know, like breadth and volume inflows and the tick. You can become pretty deadly from a scalping or day trading perspective, just using those levels alone. You incorporate the strat and the broadening formations, and then you become pretty deadly from any time frame, right? So let's go ahead and finish up. Move our 4-hour markers on the day trade chart. So this is the 4-hour up trigger. We move it to the high of the second 4-hour of today. We take our previous high a day. We move that from yesterday to today's high a day, because tomorrow that will be the previous high day. We take our 4-hour trigger down and move it to the low of the second 4-hour of today. And we take our previous low a day and move it to today's low a day. Alright, so we've got all that marked up. What we do want to do also is signal out. So price level 1, if you see that on my chart, is always the opening print for the day. Since Monday is the start of the week, that's the opening print for the week. So on Mondays, we take our opening print at the end of the day and change it to the opening print for the week. And we do that just by signifying, you know, this is for the week of 8/1, and we change it to this red short dashed line, right? So let's go ahead and change that. This is on our swing chart. This is on our day trade chart. And this is on our scalp chart. We don't have it on the longer term charts. We don't need it. It's only really valid for trades you're going to swing a week or less, I would say. But all right, so we've got that information. So we know that if tomorrow is going to, oops, let's go to our swing chart, our 4 hour chart. Okay, so we know that if we get a strat continuation to the upside on the 4 hour, that'd be a 2-1-2 up. It would trigger at the high of the second 4 hour of yesterday, which is 26.99. This also happens to be the previous high of day. So at previous high of day, it would trigger the 2 up on the day, which would be the one. Let's make this bigger so everybody can see. This could be the 1-2 down, 2 up, which it already ran, and then this combo 2 down, 2 up. The magnitude would be the high of this candle, which is 27.28. And if we were to breach that, our next target would be, up here where the weekly broadening formation is, this purple line right here, where the top of the week's expected move is. This purple box is the week's expected move, and where the year flip is at. So those would all coincide to create some resistance, and you could expect to see, if not a reversal back down, possibly some sideways action to digest the move up. And once again, we're back at the top of the range of the last 4 weeks. So at that point, bulls and bears are going to have to make a decision. Who's going to win? Are we finally going to break out of this 4 week range? Or are we going to pull back in and continue to range for the rest of this week, possibly into next week? Who knows how long? Or would that pullback induce a greater pullback, which could, of course, close this gap and possibly even come down and close this gap, where we've got this daily broadening formation and the daily uptrend all sitting. We also have the bottom of the week's expected move. 2350 is the low of last year, so a lot of that is support here, which again is why we're seeing this range from this area to this area. So we know why there's that range that we're in. Again, if we come back out here to a more zoomed out view, again, this is a monthly downtrend line. Let's go ahead and bring up the month chart so it's just more illustrated even more, right? We can see back here in October of 2024, there was a high, a lower high, right? So that once we knew this, this candle right here broke the low of this, we knew this was going to be a lower high. And the question is, were we going to make a lower low? Well, we had a weekly and a monthly two monthly broadening formations down here. So, could we have got there that month? Yeah, we could have, but it ended up playing out longer and actually, faking a bounce to cause this soft lower high with the 3, which before it went green, before it came back down and went red, tried to push back up, but still closed red. So we drew a downtrend line off of this lower high and this lower high, and it comes straight through where the price action is right now. Now we tried to poke above it. Unfortunately, the year flip here at 2813 is proving to be some resistance, combined with the weekly broadening formation, right? And then if we break it down to the day, remember that a couple weeks back we created a broadening formation on the day chart, right? So we had a higher high and then a lower low, and then a higher high and then another lower low, but we continued to range. Initially the higher high and the lower low were big enough that the broadening formation was somewhat wide, not too extremely wide, but reasonably wide. However, the second higher high and the second lower low were a lot closer, bringing this broadening formation in tighter, which again, we're just continuing to bounce in between these two levels. So we do have this weekly uptrend line here, that it does seem that combined with this month and quarter flip, right? This would have flipped the month and the quarter red, combined with this 50-day moving average. They all seem to play some support. Let's see what fibs are in here. Again, it may seem kind of messy, but we see the last quarter's high, last month's high, and then we see this 78.6 of the 2024 run-up. So if we bring this back out to the week, 78.6 of the 2024 run-up, Let's see. Let's bring out a fib. This is 2024. That looks like the low. I have to figure out where I drew that from. But it was a fib. Let's see. Swing. 78.6. Oh, I went from the low of 2023, or from the start, the real start of the run up, which was in October 2023, and we can see we're at that 78.6 line, right? It's also the 100% fib of this September to December range, right? You see how we went sideways in this area here? It's what we're doing again, right? This zone, a chop zone. It's a fight to get in here, and even if we do get in here, we've got some chop to get through, right? So we've been talking about for weeks to expect, if not a pullback, some sideways action, and that's what we're getting. So let's get back into our notes real quick. Let's make those. That way we can get out of here. Don't want to hold you guys too long. Give some of you some time to go check out the other videos that we have, explaining how we set up these charts. Maybe go check out some of Rob Smith's information. But yeah, let's go ahead and get into the charts here. Oops, goodness me. To do 4 hour. We want to get our goodness. We want to get our broad information. There we go. So on the 4 hour, let's put in our markers. If we go 2, 1, 2 down, we like to mark our downside first. It will trigger at the low of this candle, which is 2678. So let's duplicate this note. Tuesday, July 29th. It will be 106 trading days tomorrow. These notes are from the 28th. Close price is 2688. All right, and the opening print for the week was 2638. Red at 2638. So this signifies that the week will flip red at 2638. So if price action goes below 2638, that flips the week red. The month goes red at 2438. Same with the quarter. The year, like we talked about earlier, is red, and it goes green at 2813. We have our week's expected move here. We know that it's from 2801 to 2319. Friday isn't there yet because we're not to Friday. We have our gaps above, we have our gaps below, including this new gap from today. And now we're going to mark our 4 hour markers, triggers, and targets for the downside. So again, we said it would trigger at 2678. All right, and then our magnitude would be the low of this candle, so that'd be 2634. All right, and we can have an extended target here. Probably is 2595. This is that 78.6 fib, right? And that's about 50% of the gap as well. A lot of times you can see gaps, either price action will bounce off the top of the gap, they'll fill the gap, but a lot of times if you watch too, they'll hit 50% of the gap and then bounce up. So we'll put 2595 as our extended target, and we'll leave that 20. Let's see, what's the low of this gap? Oops. Let's remove that. So the gap is, the low is 2562. 2595, 24. Yeah, yep, 2562, right? So 2562. All right, so we have our trigger. If it reverses and does a 2, 1, 2 down, we've got the trigger. If it goes below 2678, we know we can get into puts at and target 2634, but that's not a very big magnitude. So I'm not really a big fan of puts tomorrow. Maybe if it just all depends on internals and velocity tomorrow morning. Because if we do go 2 down on the 4 hour, that would trigger the I'm sorry, if we reach magnitude on the 4 hour, if we do go 212 down, if it goes below 2678 and we do reach 2634, if we go below that, that'll trigger the day as well, and that would be a 2 up 2 down, and it would be into the gap. So puts maybe tomorrow, just depending on the velocity, but I don't know we're gonna push down like that. Like I said, after hours we're up 0.75% so far. This seems to be a pullback buy market, so every time we pull back, you buy, and today's sideways action with the slight pullback could have just been people loading back up. So we'll see. We got to take it, play it by ear. We don't predict where price is going to go. We just are ready for whichever way it does go, and we know what our triggers and targets are. So let's continue on here with our notes. If we go to the upside, it would be a 2 green 1, 2 up, and that would trigger at 26.99, which was also the high of day. The magnitude would be 26.99, so there's no magnitude there for us. We just want to look at the extended targets here, and for that I'll bring up our scalp chart. Yeah, so we've got 27.29, 27.29, and 26.72. Wait, sorry, 27.62. Got dyslexic on it. 27.62. All right, so those would be our extended targets. The higher highs we don't need to touch because we haven't made a higher high. Lower low we don't need to touch because we didn't make a lower low. Let's go ahead and move on to the day chart. So the day, so we would have, if we go to the downside, let's clean this up a little bit, we would have a 2 up 2 down. Right, so we've got 2 up 2 down, trigger being 26.34, which is the low of today. Right, our first target would be that 26.01, 25.95. I feel like this is off a little bit. Yeah, it is. That needs to be 25.95. I'll adjust that later, but if we look on our, yeah, see, it should be 25.95. So 25.95 is going to be our first target, and then gap close, which would be 25.62, is going to be our second target. But then our actual magnitude for the strat is going to be the low of this candle, which is 24.83. 24.83, right? And our lower low at this point will be 24.83 as well. All right. Now let's look to the upside. This would be, like we were saying before, a combo 2 down, combo 2 up. I'm sorry, combo 2 down, then 2 up. So this is combo 2 down, 2 up. Right. This is a little bit more clear. Right. So here's our 2 down. I'm sorry, 2 down, 2 down, 1, 2 down. So this is from this candle. This is a 2 down. And then this is a combo to just make one big 2 down. Once we broke that high, that's a combo 2 down, 2 up, magnitude being the high of this candle, which is 27.28. So 26.99, 27.28 is the magnitude, and we can put our extended targets out here. Oh, are we missing a gap? We are missing a gap. We are missing a gap. I thought that I've been sitting here the whole time thinking something was off, but I couldn't point it out, right? So we do have a gap here from 27.28 to 27.44. It's a small gap, but a gap is a gap, right? Gaps like to get filled. So that's 27. All right, so the bottom of the gap, so the top of the gap here is 27.44. That would be our extended target. And 27.44. The top of the week's expected move, 28.01 would be my next target. And then that 28.13, 28.50, somewhere in there would be a good, we'll just make it a real extended target. We'll just say 28.50, which is the high of last week, right? So we got our higher high of 28.46, kind of plays out with 28.50. So yeah, we're good there. We, like I said, we're a 1 on the week, so we haven't triggered the 3-2 down yet on the week, or the 3-2 up. Again, I'm kind of in a way hoping for the 2 down. I would like to have better entries on some longs if we do go 2 up the following week for a 3-2 down, 2 up. Give us a chance to have somewhat of a little bit of a pullback after 7 straight weeks of upward motion. After we've had it more than 7. That was just in a row. Total, we've had 12, I think, 14. Let's look at the week chart. We had 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11. So we had 11 green weeks out of 14 since the April low. I mean, that's pretty good. I mean, you would want a little pullback after that if we're going to continue to go higher. No, I mean, nobody likes to just buy the highs, right? The real way to make money is buy low, sell high, right? So it gets a little tricky if you're having to try and buy intraday highs for swings, because you're already at highs on the day and week chart. It can get a little bit trickier. We're already in contracts for November, January 26, January 27. So those, we're not really worried about. We got those back in April. And really, if you would have got them back in May as well, you're in good shape. Even back here in late June when we had the initial poke down before we pushed back up, if you would have bought there as well, you were pretty good. But we're just moving sideways at the moment. So we don't need to make any marks on our notes. We still know that we've got to go below 24.38 to trigger to the downside and above 28.50. We're sitting here at 26.88, and again in afters we're at 27.10. It looks like, so we're getting closer to that 2 up. If we go 3-2 up, that doesn't mean that the following week we're going to go 2 down for a reversal, right? We got to just continue to play things by ear, watch how price continues to move throughout the week and how the end of the week sets up. If we've got a green hammer or just a solid green 2 up, the chances of getting a 2 down the following week aren't that high, right? So 3-2 up isn't the worst news in the world. 3-2 down isn't the worst news in the world either. That would actually let us play puts a little bit more, sell a couple more calls, especially if it's after the August 15th expiration. We're waiting for some of those to expire worthless so that we can sell some more calls. But yeah, the right now we're kind of in a holding pattern. If you want to try your luck at scalps intraday, just be careful, follow your system. If you need to take a slight loss, take a slight loss. No need in trying to hang in there and having pride in your call or your put and taking a bigger loss because it's in the moving in the opposite direction, right? Just take the small loss, regroup, regather, maybe zoom out a little bit, see where everything is at, and just be ready to take a trigger, a high confidence trigger back to the upside, right? If you got to wait for that pullback on the 1 hour or even the 4 hour, you got to wait for it. If you keep trying to buy calls until we get that higher low on the 1 hour or the 4 hour, you're going to get hurt, right? You're going to keep losing. So it's better to shift your thinking, see that there is an opportunity for a higher low to be made, and maybe scalp some puts to the downside. And if you don't want to scalp any puts, then just wait for the higher low to be put in, and then we can take a trigger back to the upside. If it's not a higher low is not going to be put in, then we continue to take the lower highs on the 15, and they'll start to convert over to the 1 hour and 4 hour, and we'll take those more seriously and start to get into puts. But right now, like I said, we're still in the holding pattern. Things are looking good. They're not going crazy bullish, but they're still looking good. They're not bearish by any means. So just got to hang in there, and just be ready to make a play on what you have the most confidence in and making based off of your notes and your analysis of the charts, right? So this is just our opinion on how things look. Throughout the day, if you follow us on X, at Bullish Chips, you will see our real-time entries and exits that we do make throughout the day, and you can get a better feel for our trading methods. So again, check out our other videos, links in the description, to get a better understanding of how we set up our charts, and continue to follow along. Make sure you hit the subscribe button. That way we can continue to build this community, help reach other people that may not even know about SOXL or know about the bang for buck that you get when you're buying options, in terms of like delta, theta, and the cost of your premium. Taking all that into account with the beta of a pretty high beta of the underlying ticker symbol, and you've got a pretty potent recipe for some big gains. So especially if you get in at good pullbacks, and you're able to swing, and really that delta go to work. SOXL is a great ticker symbol to be trading. Again, don't invest your whole portfolio in SOXL. It is a triple leverage ETF, so it does have that high beta, but it is a method for you to make money basically daily. So I hope you liked this video. If you did, hit the like button. If you have any comments, leave them in the comment section. Please be respectful, and I'm glad to engage with anyone in the comment section, and discuss any thoughts that they might have. I love to hear other people's opinions because it may open my eyes to something that I'm not seeing. So yeah, I invite everyone to become active in the comment section, and make sure you hit the notification bell so that you know when the next video is released. I hope everyone has a great rest of their night, and I look forward to the trading day tomorrow. I hope everyone has a great trading day tomorrow.